All right, guys and gals, this is Blake Morrow. You were listening to the Morning Edge webinar, and I was just reminded by Ziggy that on Thursday, and I don't know how I missed this. I didn't see it, but actually, Janet Yellen Thursday evening is participating in a panel discussion with Greenspan, Volkner, Bernanke, and so that's in New York on Thursday night. That might be a market mover. Actually, I actually may on Thursday, depending on what my schedule is, I may try to listen to that panel discussion. That's probably going to be a pretty damn good one. When you have all these, obviously, the chair of the central of the Fed, but also previous chairmen of the FOMC as well. I think that's going to be a really, really interesting panel discussion, I would think. That happens on Thursday, so just Thursday at 5:30. That we'll have to mark our calendars. Thank you, Ziggy, for the update. All right, so let's get started with our analysis of the FX. So in my opinion, one of the big developments for the euro dollar was, last week was the rejection at the 127% extension. Okay, so we had this, move here on the 4-hour charts. We did a fib extension, but more importantly, what it did is that it showed failure above 114. Okay, so the euro has come under a little bit of pressure, but we're still supported above what I consider key support, which will be not there. It'll be right here. Okay, that high is 1340, 1342 actually, but the low right here is 1334, which is 1335. And what I imagine is this, and let me remove this line here. This breakout point is going to be very important. And you can see there's already buyers coming into the euro dollar as we make our approach down there. Okay, so for right now, 1335, which will be the low from, I guess that was on Friday, right? Okay, that low there is going to be important support for today. Okay, 113.35. And look, if you guys want to get long the euro dollar right now, that's your risk. Okay, now I happen to be short the euro, but I'm just saying, from a trading perspective, if you want to get long the euro, just put your stops below those lows, because if we drop below those lows, you're going to be wrong, right? Or correct? Correct. Okay, now resistance is going to be this high. All right, one of the things that you have to also keep in mind about the euro dollar is we are making higher highs and at this point higher lows. So it is even though we're not in a bullish, longer term trend, it's very choppy. Okay, we're up towards the upper end of our range. The fact of the matter is intraday, and maybe intraday we're still in a bullish trend, and as long as we stay above this 1143, we're still making higher highs and higher lows, even on a daily chart. Okay, all right, so resistance is, the high from Friday, which will be 114.37. So I'll just put 114.40. Okay, that's resistance, and I'm going to put range, but I think it's intraday it's still pretty bullish, but just longer term we're still in a range, longer term range. Okay, and below 113.35, and there's gonna be some sellers down there, because I have to imagine anybody who's bullish and who's been buying this thing since NFP, they just don't want that level to get taken out. That low gets taken out, and then you're gonna probably get some sellers coming into the market, I would assume. All right, so there's the euro. Let's go over to the cable. All right, here's the pound, and the pound's had a really nice recovery, which I'm actually surprised about. And I'm happy about actually because uh, I am short the euro pound. How many of you guys? Let me ask you this question: how many guys are short the euro pound from Friday? Anybody short the euro pound from Friday? Scott is. Jeff is. Greg is. Of course, Greg is. Nick Kozman, Jack, Pramlatha, Hamid. Oh, Hamid's in pound Swiss. Okay, it's opposite of the euro pound, but it's the same, basically same trade. Ahmad, Jurian, Avenji says I was, but created today. So you took profits, I'm assuming. Gary is. Yaya is along the pound Swiss. Kevin is. Ben is from 80, 80, 81, 80-10, I assume. Zach is. Yazzie, Saeed, um, Craig is from today. JD, Matthew, Jamie from London. Um, John says yes, I was, but I covered for 40 pips. Okay, see the euro pound. I'm establishing a short position. It's actually my only pound trade right now, and everybody should know that why I'm shorting this one. I think I've been telling you. I don't know how long I've told you guys. I don't know how. If I probably have to go back maybe for the last 6 months and say that I've been targeting 80 cents or above 80 cents to be on the short side of the euro pound. So um, I've been, just waiting for this trade forever. So I'm glad. Roy is, Neil is, Jose is. So, yep, KJ is. Yeah, and I mean, I've been waiting for this. This has been the, double bottom range extension. We almost hit it to a T, matter of fact. Almost to a T. All right, almost to a T. All right, and we hit this is a 38% retracement. Okay, also trend line resistance. I mean, it's huge all the way around, and any which way you slice it. Okay, so 38% retracement came in at 80.45. Trend line resistance, double bottom extension. So if you weren't shorting the euro pound, or you're not shorting, you should think about it, because your risk is manageable from here. Like I know if it gets above 81 pence, I'm getting out. Period. End of story. Like I don't, like that's it. That's it. All right. But the euro pound is, knocking its head above there, and obviously showing some signs of selling. So now you take a move like this, and now you just sell rallies back to 80 pence. I mean, that's the trade, where you can really manage your risk fairly well. But anyway, the reason why I point that out is because the pound dollar is showing some, resilience down here. Okay. And I'm surprised, because I think the last poll that I saw over the weekend shows that the Brexit, the leave vote was a little stronger. But I know there's so many polls, and I'm not too sure which one's which. So that was like something I read over the weekend, but that doesn't obviously didn't matter, because the pound is going higher. So I don't think it was that. And the construction PMI came in, a little bit less than expected. So, the pound's just doing what the pound does, which is, kind of mayhem from time to time. But regardless, I think that any rally up to 143 is going to be really good resistance. So, like, if you remove that, you remove this, you take this trend line here, right? Oops. So this trend line here, you have to imagine that it's going to come in somewhere up here. So towards 143, then the underside of this trend line, I don't know what that's from. Okay, the underside of this trend line, will probably get tested too. So just around 143, maybe even 143 and change is going to be resistance. I'm gonna put it down as 143.15 because you have to imagine the stops might get taken above 143. But that's going to be pretty good resistance today, 43.15. I would say that's going to be good resistance, and we are in a range. Now, support. Well, we found support down here. You obviously have, your 618 right around 142.10. So we probed below the 142 overnight. This support down here, these lows come in at 141.70. So I'm just going to write down that support probably will be fairly strong on any dip to 142. Because yeah, you have to imagine here that if we do get a pullback from where we're currently at, right, it's going to look like this. So if we get a pullback here, it'll look like that. Or if you get a rally here, it looks like that. So if you want to trade the cable, I would, I'd be a seller up here or a buyer down here. I don't think I'd do anything with it right now. All right. If you want my, opinion of where we're currently at, it's like, I don't think there's a whole lot to do with the cable at the moment. You just buy dips down to 142, you sell rallies above 143, and you chip at it that way. I don't know if there's, like I said, I don't know if there's a lot to do with it right at this moment. Okay. All right. Let's go over to the Swissy. Now, I am long the dollar Swiss. I'm long not too far from where we're currently at. I'm only up 3 pips right now. I'm long at 95.95. All right, now why am I long? Because this is another trade that I've been waiting for months. When I say months, I literally, when we were up here, so many people were asking me, we're at parity. Blake, hey, you bullish the dollar Swiss here? No. Where you want to buy it? Near 95.50. Okay, and we get to 97 cents. Hey, Blake, is this on your radar? Are you starting to buy the dollar Swiss? No. When it gets to 95.50, I'll start looking at it as a long. Then I get to like 96.20. Hey, Blake, are you starting to get or 97.20? Hey, Blake, you starting to get bullish the dollar Swiss? No, I'm going to wait till 95.50. So we finally got there. Look, imagine that. I love it when a plan comes together. Okay, so last week we got as low as 95.55, which happened to be the 618 retracement, which happened to be the retest of this trend line. Now, granted, I started buying a little bit ahead of that because if I think that we're going somewhere in price, like if I think we're going to 95.50, I also don't think that I don't think I'm, that good that we're going to actually hit that price to a T. Sometimes I get lucky and we do, like, it did. But more times than not, I'm looking at charts just like everybody else. It's not like I'm performing brain surgery with analysis here. It's very basic technical analysis. So I have to imagine that everybody else is looking to buy it once we get down to 95.50. So I'm going to start buying it ahead of time just to make sure I can, get a position in. And so, so as we were dropping towards 95.50, of course I was trying to get long. All right. Now, from here, from where we're currently at, what I will tell you is that until we break above 96.50, okay, that will take off the downside pressure. That is important resistance, okay? And if you get another dip down to 95.55, that's important support. Try to pick it off down there, okay? We're in a longer term range, longer term range here. So if we can get back down to 95.50 today, yeah, I mean, that's a good place in my opinion to try to pick off some longs if you can get it, okay? All right, let's go over to the dollar yen. Okay, the dollar yen, I am short the dollar yen. Remember, the dollar yen, it plays by its own rules, right? It is not your normal dollar pair. When I'm playing the yen, I'm pretty much playing the yen. It doesn't matter if I'm playing the dollar or the pound or the euro, yen, or Aussie yen. I'm pretty much playing the yen. Now, from time to time, I try to spread out, my risk through multiple yen pairs, but I don't have any other yen pairs right now. I'm just short the dollar yen. My cost average right now is 112.50. Okay. Um, Currently, right? I'm not getting super aggressive. I didn't add anything from, I take that back. I added a little bit post non-farm payroll. That's why my cost average dropped, but I'm not like super aggressive yet because I know we're closing in on support. I'm not a dummy. I know that 111 is major support for the dollar yen. Okay. I still think the dollar yen is going to 105, but there's a lot of support here. And as Paul showed you this morning, there's a lot of resistance in the 10-year. Okay. Now, what I also want to point out, and I know I've pointed this out a lot, but I'll point it out again. Here's the E-mini futures. All right. And what we've seen is a massive divergence between the S&P and the dollar yen. Okay. So here's the dollar yen. Here's the S&P futures. Okay. Actually, let's go to the daily chart. It's going to give us a better look here. Okay. What's typically a very tight relationship, we've had the stock market rally, dollar yen has not followed suit. Okay. So what that means is should the dollar yen, or should the equity markets come down from current levels, we should eventually break through 111. Right? Right. Okay. So that's why, for me, I think that this 111, and basically 110, 65 is eventually going to break. But what we did do, kind of like do, but less smelly, what we did do is we found support here at the 786, the 78% retracement. Okay. That has become very important support for today. That low comes in at 111.32, which we'll just put 111.30. 111.30. That's very important support. Okay. Now, if I were you and I was looking for a short position in the dollar yen, I would be looking up here. If you can get, a short off somewhere around 112, that's probably a better place to be on the short side versus shorting right now. Okay. So 112 will be resistance. We are in a bearish trend. Now, the reason why we're in a bearish trend is because of the head and shoulder pattern that's attempting to still play out, Okay. Let's go to I'll do the Canadian really quick and then I'll put you guys on hold. All right, so here's the Canadian. So the Canadian gave us a massive hammer on Thursday. Okay. Or was it Thursday? Yeah, I believe it was Thursday. A massive hammer on Thursday. We did rally on Friday. We got rejected at resistance perfectly at that 131. Remember, I sold some of my longs at 131.27. On Friday, I sold right here, like right there, and I added a little bit back Friday afternoon when we dipped down to here. When we dipped down into the 50s, so like right around where we're, actually a little higher than where we're currently at. I bought a little bit more down here. So my cost average of my dollar Canadian is right where we're currently at, basically, because I sold some here, and we go through FIFO, so it kind of screws up my cost average. Um, but the thing about the dollar Canadian, and the reason why it's coming down right now is that we got crude that's bouncing. Okay, so keep that in mind. And also the dollar's pulling back a little bit too. But I think that the dollar Canadian, if you can get a pullback to this consolidation area, that's going to be great. So you take this low to high, okay? You got 130 as a 50% retracement, 129.70 is a 618. If you can get long somewhere down there at 129, what was that? 68, I'm sorry. So 129.70, it's going to be really great support to be on the long side. Obviously, the resistance now is the channel resistance. Okay, so we're talking, any move to 131.30 is going to be significant resistance. All right, and we're still in a bearish trend, just so you all know. I am still trading counter trend, and I think that while we're below this channel, while we're below this, it's still a bearish trend. I am trading counter trend. I am very well aware of that. That's why my position size is not full size yet. I'll give you the yet. But okay, we get something like this. We get back above that trend line, then it turns really bullish. Okay, so we have to get over the channel high, the channel resistance, and then back above this yellow line. Then we get a nice bounce. But I'm already starting to build a long position down here, as you all know. Okay, I'll be back in a few moments. When I come back, we're going to do the Aussie, the Kiwi, dollar index, all that fun stuff. So don't go anywhere. I'll be right back. All right, ladies and gentlemen, this is Blake Morrow. You are listening to the Morning Edge webinar. So let's get back to it. Just a real quick update. I mean, we're seeing the euro dollar bounce just a little bit. Cable still holding up near its highs. Dollar Canadian still pulling back a little bit with crude firming. Gold's bounced just a hair. Futures are showing a little hesitation up here, which we'll get to the futures in just a second. Let's go ahead and wrap up these commodity currencies and the peso and dollar index and all that other stuff. So here's the Kiwi, and the Kiwi dollar. If you guys missed this, the Kiwi dollar, we have a head and shoulder pattern, or yeah, double top. I'm sorry. Monday morning. See, this is what happens. I got up at like 2:30 this morning, so brutal, huh? Yeah, it was one of those, I got up and I said, hey, it's time to get up. Why? I don't know. It sounds like a great idea to me. Okay, good. But what you'll notice here is we have the double top, okay, neckline. Extension takes us down to the basically 68-cent level, okay? There was a note out from I forget what bank that's targeting a lot lower. They're looking at they're looking for a move back to like 66.50 or something. But anyway, here, let's remove this. Okay, the longer term, just so you know, we have a AB equals CD, right? AB CD, perfect. We hit channel highs. So here's a 4-hour. AB equals CD, very measured move. Like perfectly measured move. If you guys missed that one from last week, we hit channel resistance again. All right, double topped it. So if you go to the hourly, here's your neckline of the double top, and we because Friday was a little bit of obviously some volatility. We broke through, came back up, yeah, but we've rejected this trend line thus far. So that trend line's probably pretty important today, and you can see this. I think any rally up to 69 cents is going to find some sellers, because if you're looking to short the Kiwi, okay, your risk is above 69.70. So any move up to 69 cents, it's like, all right, well, I know where my risk is. And that, again, I try to explain this to everybody. In trading, you can't control any, though you can't control much. Okay. The only things you can really control is your discipline and your risk. And obviously there's problems with risk because you can get gaps through your prices, through your stops, but 99.7% of the time you can control your risk through stops. All right. Most times it's not going to blow right through your stop. I mean, there's that, that tape bomb occasional situation where, something happens and then the markets go crazy, but 99.7% of the time you can put your stop in and you can protect your account. So you can control your risk and you can control where you enter, which means that you have to be disciplined about what you're doing. All right. So in this case, like if you get a rally back to 69 cents, I think that's probably going to be pretty good resistance if we can even get up there. But you'll have traders that go, hey, if I get short around 69 cents, my risk is above 69.70, or maybe a little bit higher, right? We are in a range anyway. I feel we're in a much longer term range with the Kiwi, all right. And one of the other things that you got to think about here too is the failed breakout attempt that the Kiwi has had. Okay, Kiwi's tried to break out above the highs, a failed rally attempt. Which really means that this resistance is very significant now, right here. Okay, but you see the failed rally attempt and the failed breakout, that's got to concern anybody who's long the Kiwi at this point. Then with the RBA tonight, if the RBA tries to talk down the Aussie dollar, the Aussie comes down, the Kiwi is going to get drugged down with it too. All right. Now support, you go to Friday, we have support that is obvious from an intraday perspective, but I still think we can go lower than this. That's why I'm not going to write down this number. But that low from Friday, if we trip that, which comes in at 68.35, then we should see 68 cents. So 68 cents will be the target for the double top. Okay, that should be very important support on the way down. Let's go over to the Aussie. So the Aussie dollar, remember the RBA is tonight, later tonight. I'll be probably sleeping right around then, but we have the RBA tonight. We have the RBNZ, or excuse me, we have trade balance tonight, I think, as well. So the Aussie dollar should have really good resistance on rallies to 76.60, but let me check something else. Okay, so we're on the daily chart, right? Here's your 618 retracement. Just like the Kiwi, failed rally attempts above 77 cents. That is concerning, okay? So now, if you're bullish, that is, now any rally to 76.60 is probably going to find some sellers. That would be my assumption, okay? Okay, 76.60. It's not great resistance, but and we've been bullish the Aussie. I'm getting concerned though because you notice that we've got, like, here, just an example. So we've been bullish as we came and broke out through here. Broke out through some of that resistance. We turned bullish. We went from range to bullish. We've not been able to capitalize on new highs, and so that's got to be concerning to bulls. All right, so what that means is this support down here is going to be pretty important on the way down. All right, and you can see that this way here, this is triangle support, right? So all of this is going to intersect right around 75. Let's just call it 75.60 for argument's sake, and that's going to be 75.60. That's going to be pretty important support on the way down. If those levels give way, then that means that if you're an Aussie bull and you've been bullish, you've been buying it, you start breaking through some of this support right through here. Here, let me grab the highlighter. Right through here, you start breaking through that. That's probably gonna start tripping some stops down there. All right. Okay. Let's go over to the dollar index. So here's the dollar index. Again, I've been building some dollar longs for the last couple of days. I do think that you know, you have to. It's very dangerous. Here, let's go back to the daily chart and let's zoom out a little bit. Oops, wrong direction. Here we go. I think it's very dangerous to be bullish, or excuse me, super bearish or bearish the dollar as we approach this 93 dollar level in the dollar index. Why? Because if you look at the dollar, the reason why I got so aggressive buying the dollar right there on that spike low, you know, I blogged about it too on pipzar.com back that week. That was a breakout point from 2004, 2005. And it was a real big breakout point right here on this large move, you know, a year and a half ago or whatever. So a dip was perfect right to it on the dollar index. So, you know, that support is going to resonate with dollar traders on the way back down. Meaning that if you're you know, shorting the dollar as we start making our way down towards that 93, 92.50 level, people are going to remember that. They're going to remember that spike right there. All right. Now that doesn't mean we're going to get down there, but what I'm trying to show you is that we're going to start seeing some dollar support down here. All right. And now on an hourly basis, I think it's pretty clear. Resistance, you can see it right there. We drew that Friday, right? You can see how we rallied right to it and reversed. This is significant resistance now, 95.10. You want to take the dollar pressure off? 95.10, that's got to break. And that'll take the downside pressure off the dollar index. Okay. Now support, I mean, look at the long wicks that you get down here. That means, you know, people are interested in buying the dollar down here. Now I know we can go as low as 94.30, but you know, I mean, I guess I'll write down 94.30, but you can see that the traders are, you know, looking at it and finding it attractive down there. So 94.30 will be support. It'll be pretty key support. 4.30. All right, let's go take a look at the peso. Oops. Here's the peso. So I started buying the peso last week. All right. And this is a descending wedge. You can see it right through here. All right. I've had this yellow box drawn out for about, I don't know, a week and a half, maybe 2 weeks, week and a half. Okay. Somewhere down here. I believe that we are near a lot of support. Now, the thing about the peso is this is going to rally as we go risk off, which I don't know if you're watching futures right now, but the futures are coming in. So as the futures come down, the risk to the US dollar Mexican peso going higher is much higher. Matter of fact, if you guys are not long the US dollar Mexican peso, I would consider getting long the US dollar Mexican peso soon. Okay. As long as we stay above, well, I don't even know if we're going to get all the way down there, but I think as long as we stay above the 17, 20 level, it's probably going to be. Any dip down to 17.24, that'll be great support if you're looking for longs somewhere down there. Then resistance is going to be 17.50 without a doubt. So, and And like I said on Friday, reluctant to put it in anything but range. You know, a lot of people are like, "Oh, well, it's bearish, Blake." No, it's, you know, it's come down, but I don't think it's bearish yet. I don't know if I can really look at this chart here. I don't know if I can really look at this chart here and go it's bearish. Now, you all know that I was aggressively shorting the peso up here, and I covered it as we came in towards 18, like 18.20, and I was short up here. I thought this was more of a blow off top. And just so you all know, I am a peso bull. So let me explain that. I may be short the peso at this moment, but I think we have peaked. The dollar Mexican peso exchange rate has peaked. I don't think we're going to break this. Maybe not for a while, until the Fed starts raising rates again. So I think, and even if we do, it depends how the market takes it. But I think any rally from here is going to be a great short. I am looking to short the U.S. dollar Mexican peso on a bounce. Even though I'm long right now, I'm looking for this. This is the better trade right through here. That's the better trade, right? But shorting it down here, I think, is very dangerous, especially with stocks elevated at the place they're at. You know, one of the best barometers of risk on, risk off is this currency. For the currencies that I trade, I mean, if you have the ruble would be probably a good emerging market currency to, you know, think about too. But what I'm trying to say here is that I think the stock market's going to come down a little bit, and as the stock market comes down, the U.S. dollar Mexican peso should rise. So what do we do with it here? Like I said, any dip down to 1724. Probably be a good place for longs. And if we break 1750, that will more than likely coincide with the stock market coming under some heavy pressure. Okay? So if we break through this resistance, that means the stock market is in, you know, it's probably looking extremely weak. Here's the Norwegian krona. US dollar Norwegian krona is coming under some pressure. That would have probably more to do with crude oil. I do have a little long in the US dollar Norwegian krona. I am very well aware that we have this head and shoulder pattern that's trying to play out. But I think this is going to move more with the euro than anything at this point. Support will be at 1723. Resistance is back here at 850, 845. Support 825, 848. And the Swedish krona, we're coming into some major support down here. And if you don't know what I'm talking about, that's what I'm talking about. Very, very similar to the dollar index, right? Very similar to the dollar index. So major support comes down here at 803. But you see, I don't know where good resistance is. I mean, good resistance is going to be right here. But that's something that's not going to get hit today. You know what I mean? Hell, this thing might even be we could even be flagging lower here, like this. Possible. Anyway, I just have to keep an eye on it. Let me go to the hourly really fast. It's not clean, so just be careful with it. I'm not even going to put it on the bias chart because of this wick here. I'm going to keep it off for now, but keep your eye on the Swedish krona. I don't have any exposure here, but just keep an eye on it. Okay, here's your bias chart. Your bias chart is done. Let me go ahead and answer some questions that have come in. Very, very slow price act. Oh, you know what?